So happy August, everybody.
Yeah,
Happy August. We
seems
are.
weird.
Yeah, the dog days of summer. I don't know. It's been a really beautiful summer so far, though, hasn't it?
Well, it hasn't been warm enough for me.
No, you like it hotter? I don't like
I
hot
do.
weather. I
I like
put
heat and sunshine.
yeah, I actually put a sweater on. Of course, we're right on the lake, but and I have all my doors and windows open. But yeah, anyway, beautiful. I'm loving this weather.
I'm kind of the opposite.
Yeah.
Terrence. I like it. I like it cool.
Yeah,
Oh.
me too. Me too. Yeah.
I like it. Somebody was just asking this the other day, and we were talking about temperatures, and they were saying, "Well, you like it this temperature." That I said, I like it the same temperature outside as it is inside.
No.
Like, I like it just to be like. There's a reason we set the thermostat for that temperature because it's comfortable. That's how I want it to be outside too.
Yeah, there you go. Sit back. Then you don't look like you got a beanie copter coming out of your head.
Kind of like it.
There you go. That's perfect. I love it.
I'm digging it, man. You could start a new fashion trend.
Oh, those used to be hats. I remember those hats.
Yeah.
Exactly.
There was a little
kids, right? When we were
Wasn't
kids.
there a cartoon character that had one of those little?
Yeah.
I think one of the little rascals had one.
Oh, okay.
Beanie copters. They're called beanie copters.
Oh.
Yeah, those things were awesome.
Called them. I don't know.
They didn't serve a purpose, but they were awesome. I loved them. I never had one, but I enjoyed looking at them.
So I was talking to Wes a little earlier and like, well, what are we going to talk about today? And I actually have a short sale going on right now, and I haven't done a short sale in probably, I don't know, what do you think, Wes? 7 or 8 years anyway, right?
That's probably 2012, 2013, probably.
Yeah. I mean, we used to do a lot of short sales. Well, I don't know, a lot.
After the crash, yeah.
Yeah, I mean, I never early on, I decided I was not going to list short sales because it was just too much work and you never knew if you're going to get paid or not. And maybe we should talk a little bit about what a short sale is, actually.
Yeah, I'm kind of curious how the property you've got right now ended up being a short sale. Like, how is it underwater?
Well, I don't actually know the answer to that because I'm representing the buyer, so I don't know what the seller's situation is. But so a short sale, for those of us who don't know, is when a seller is selling a property for less than what they actually owe the bank. And what ends up happening is that the bank actually becomes the bank has to agree to accept less than what the seller owes them. And as a result, the bank is the determinant as to what the property will end up selling for. So the reason I never wanted to list them is because I actually very early into the crash, I had a deal where there was a first mortgage and a second mortgage. And the second, I don't remember the numbers anymore, but just as an example, the first mortgage was $300,000 and the second mortgage was $50,000. And in a junior position like that, the second mortgage lien holder basically is beholden to the primary lien holder, the first mortgage, giving them what it is they want, what they want, so the second lien holder was prepared to accept for this $50,000 lien. They were prepared to accept, I think it was like $2,000 or $3,000. I mean, it was crazy. Like they were basically walking with, huge loss. And the first lien holder said, well, and the buyer's like, well, we'll come up with that money because the first lien holder wanted whatever money was on the table. And the and the buyer like, well, we'll come up with the $2,000 that the second lien holder is asking for. And the first lien holder said, well, if you're putting another $2,000 on the table, we want that money.
Yeah. Yeah. The way that works. Yeah.
Right. And the deal essentially fell through at that point.
Yeah.
Anything
the market's willing to bear, the first lien holder is going to take.
Well, yeah. but here's what's so crazy about it. I mean, the first lien holder was going to be made practically whole, as I recall, on this deal. I mean, this goes back a few years, so I don't remember all the details, but the first lien holder was going to be made whole. And what ended up happening is the property went into foreclosure. 3 years later, fast forward 2 or 3 years later, the second lien holder is out altogether. Of course, they were done. They were out. The first lien holder took title to the property. They ended up getting maybe half of what they would have gotten 2 or 3 years later than what if they had just taken.
There was a stat. Remember, I was working with the twins on the short sales, and there was a stat during those years after the crash that if the lender took the property back, it averaged, I can't remember if it was like 37% or 42% of what of like the loan amount or whatever that they got, versus doing a short sale, it was somewhere like in the 80s or something. So it made sense for banks to do the short sale, but there was always so many complications. But
yeah,
the one thing I always tell people about short sales, well first of all, for buyers, I think that they can be, it's a very misleading situation at face value. Because they see these properties listed for what seems to be like a great price, like an incredible price. So they think they're going to get a deal, which maybe eventually they will or not. But the problem with short sales, I always tell people, is that it's set up, the short sale process is backwards. So if you're behind on your loan, or going to be behind on your loan for whatever reason, if the property, you're underwater on the property, it's worth less than what market value is, and it would seem to make sense that you would go to the bank and say, okay, I owe you 300, I can get 250 for it, we think, will you agree to do the short sale? And the bank says, we won't tell you that until you have an offer on the property. And once you have an offer on the property, then we'll make you go through all of this, jump through these hoops and do all this paperwork and do write us a letter to tell us why, you can't, a hardship letter to tell us, why you can't, make up that difference, etc. They won't tell you ahead of time if they'll do a short sale or what they'll sell it for. So the seller is forced to put the property on the market, not only not knowing if the bank's going to do it or not, but having no idea what price they will or won't accept. So therefore, they might, most agents would go and put that property on the market for the 300, and then they don't get it, and then they'll put it for 290 and they don't get it. They'll, eventually, they might have it on the market for 200,000. They might have it on the market. They could put it on the market for $1, and it doesn't matter. And it doesn't matter what the buyer offers on the property, because once they have the contract and then they go into the short sale process with the bank does all of their own BPOs and does all of their own, numbers, and takes a long time, and then comes back and says, well, here's what we'll sell it for, which has absolutely nothing to do with what you are marketing it for or what you have an offer for. That doesn't even play into the equation. So then there can be these short sales on the market for, like I said, it could be for $1, but it doesn't make any difference, so that's why they look like great deals. But anyway, it's the process is backwards, and therefore, it's confusing and difficult to deal with, but there's some ways around it.
Well, I mean, so what ends up happening, and the short sales that I did do, the other point we should probably make is that sometimes this process with the bank can literally take 6 months. So
at minimum.
Yeah. So if you've got a buyer that's looking for a home to live in and they need to get in by a certain date, I mean, it's not an appropriate purchase. But of course, I do a lot of work with investors and it's like they don't care. But the best time to get into, usually what ends up happening is by the time the lender gets around and telling you what it is they'll accept for the sale, the initial buyer has evaporated. They've gone.
Sure.
So then the agent ends up having to put the property back on the market. So
But at
that,
least at that point, it could be an approved short sale, which means the price has been approved by the bank. The actual short sale has been approved by the bank.
right,
And that's where it can be a good deal for a buyer.
right. And those are the deals that I closed where it was where the first buyer had gone away and we came in the junior, the second buyer. And now the thing about that is after you wait 6 months or more, 7 months, whatever, for the lender to tell you what they'll accept, once they give you that number, you have 30 days to close.
Yeah, right.
It's
They'll
like,
usually extend that, but yes, then
yeah.
they'll,
Yeah, usually they will, but it's like
wait, and then hurry. Yeah.
yeah, it's like hurry up. Okay, we have 30 days. We got to get our loan and get our ducks in a row and close.
Yeah, right.
So it's
Yeah.
crazy. So they're crazy, but anyway, yeah, I haven't done a short sale in quite a long time, and the only short sales I ever did was working with. I shouldn't say that. I actually did have a buyer who bought a house, and usually they're better properties than a foreclosure because by the time the bank gets the the property back as an REO, it's been sitting vacant for a couple years. That process can take literally years in the courts, and maybe with COVID, I don't know. I'm just kind of wondering what the impact of the rent moratorium and the eviction moratorium, the foreclosure moratorium, that's being lifted, what impact that's going to have. I don't know.
What do you think,
I'm
Terrence?
sure there will be a backlog once it happens. I know that nationally it ended yesterday, but in Chicago we have another month. So I'm sure there are plenty of landlords and banks just kind of waiting for August 31st, and on the 1st of September they're going to hit submit. So I hope that the city is ready for that because it's going to happen. I'm sure.
Yeah.
Did they
Well,
extend it again, Terrence? Do you know? Was it extended, or was that what the deadline always was August 30? I mean, has that
Well,
been
it's been
the deadline for a while?
their deadline keeps coming up, and they extend, coming up, and they extend, coming up, and they extend. But this time they're not.
Nationally they did. Nationally, you can go ahead and do it, but here in Chicago, I don't know if it's state. I think it's statewide. It's August 31st right now.
Yeah, we've come and gone by several deadlines, Mary.
No, I know that they've kept extending it, and I know that Biden said he couldn't extend it because the Supreme Court, Brett Kavanaugh, actually, the Supreme Court Justice Brett Kavanaugh made it very clear that if Congress didn't extend it, that the Supreme Court was not going to uphold another extension because Brett Kavanaugh was the deciding. He was a tiebreaker. He was a deciding vote. So he said Congress has to do it. But
so here's regarding the short sales again. I was just going to say this is kind of, I found the dirty little secret in the lending industry regarding that. As we mentioned before, like the numbers, the stats shows that it doesn't make sense for the bank to hold, to try to take the property back, right? They and it would make sense for them to do, like I said, reverse the short sale process, so that you knew up front what they would do, and before you went to market the property. And it felt like everybody lost in that situation. So what I came to find out, even after being in real estate for all of these years, not really always understanding the behind the scenes in the mortgage world, and the way that people hold the notes on these properties, or entities, I should say. I can't remember the names of the banks, but there was a bank, a small private mortgage bank on the West Coast, that during the big boom of the late 90s into the early 2000s did a ton of loans around the West Coast, particularly new construction properties. And right before the crash, a bigger bank, I can't remember if it was Bank of America, I don't think it was Bank of America, but one of the bigger banks bought them right before the crash. Well, the thing about that mortgage company was they actually held their own paper. So they actually owned the mortgages on those. They weren't just servicing them. So what most people don't realize is when they have their mortgage, they pay to Chase or to whoever, they're just actually servicing that loan for an entity that owns the note on that property. That is a, I don't know, like a fund, a pension, a whatever. There's all these different, entities that own the mortgages on that, and all the banks, for the most part, are just servicing those for the client and take a fee. So that's why when all of those properties went into foreclosure and everything, during the crash, the banks actually made a buttload of money. Everybody thought they were going to lose money. That they had their best returns during that time. So anyway, back to the story when that.
You mean because they were servicing the loans? You mean? Because
they were servicing the loans, but they weren't the ones losing the money.
Right. It was the investors.
So more importantly, they weren't the ones losing the money. So in this particular case, the bank that had bought that mortgage company, and suddenly they had all of these notes that they owned that they're not used to owning. So they completely reversed the process for those loans only. They hired a team. I knew one of the guys. That's how I learned about this. I knew one of the guys that they hired to go out as soon as anybody missed one mortgage payment. They sent this guy to meet with them, find out what the deal was, offer for them to put it on the market, and would tell them up front, here's what, if you want to sell the property, here's what we will, here's what the amount we would take. And here are some, real estate agents you could work with, put it on the market now. We won't hurt your credit. We won't do anything. We'll give you an opportunity right away to get rid of the property, and here's what we'll sell it for. And then they did a 30-day review. And if it hadn't sold, they would reduce the price. They would reduce let them reduce the price and reduce the amount that they would take on the property. Those loans were sold and done within 60, 90 days.
Wow.
So when they owned the note and they were the ones losing the money, the process completely reversed. But for 98% of all the mortgages on the in the country, the banks that you're dealing with, that you're paying your mortgage to, didn't care, because they're just getting paid to do all of that. And they're even getting paid to handle the short sale process and all of that. So it's really kind of surprising. But anyway, that's why the short sale process doesn't make sense.
Yeah, it totally doesn't make sense. So I hope we don't get back into that environment. I sure do hope that we learn something from the Great Recession, but who knows, right, Terrence? Who knows?
History repeats itself, as they always say.
Yeah. Well, I mean, and who knew? Who could have predicted? Well, I mean, yeah, I mean, we all remember the days when, well, Wes and I remember the days when, I don't think you're old enough, Terrence, but when if you could fog up a mirror, you could get a loan, and who knew all this credit-backed mortgage securities? Who knew that that's what was going on? I mean, it was but it was like a train wreck just waiting to happen, obviously. So.
Every once in a while, I go back and watch The Big Short just to refresh my memory and
that's a great.
tell me what's going on.
That's a great way to learn about that. All that
Oh yeah.
But
Oh yeah.
we're so not in that environment anymore. I mean, the lenders apparently did learn something from that experience, because they were all prepared when we locked down last year. They were all prepared for another, fallout, and they had so much money stashed in reserves that they all have more money than they've ever had right now.
Yeah.
I mean, it's crazy.
Yeah. Oh yeah. They're ready to go.
They're
And what I
ready to rock and
wonder,
roll, right?
what I wonder is if those financial institutions or entities that, like I said, the pensions, the funds, whatever, that buy that paper, if they learned anything during that, and if they will, be more careful about the paper they buy, and just accepting at face value that it's all a paper or whatever, classified as such, and if they'll, let the banks do that to them again.
Yeah, that will be interesting. But I mean, I know that the underwriting process, and you can speak to this, Terrence, is pretty choke a horse compared to what it used to be 20 years ago.
Yes, it is. Definitely. I mean, everything is scrutinized very, very heavily, and that's, what is it, 11 years ago now is the reason why.
Right. Yeah, exactly.
Which, you know what, I trust me, I get yelled at quite frequently. Well, I bought a house back in 19. Like, let me stop you right there. We are different times. I'm not going to take your word for it. I need to see it on paper.
Well, Wes and I remember the days when you didn't have to verify your income. I mean, we as real estate agents, you could just make stuff up and nobody bothered to verify. And if you could,
Well, and to be
again,
back, right, Wes? I mean, it's so
Yeah.
simple for us self-employeds to get financing.
Well, and to be fair, any of those no doc loans, they had to have a long history of good credit. So, which could actually be more telling than what their current, income shows, because so many people, you don't actually see or know what they make. But yeah, it seems to me that some of that has come back. I've heard there are at least some different levels of no doc loans, or no income verification of some sort. Do you see any at all, Terrence?
Nope.
No. Okay. I don't know if it was like they had to verify the income, but not I don't know. It seemed like there was some like level of it that I heard was coming back, but I never really heard. I never really.
Yeah, I'm not sure that it wasn't that you didn't have to verify it, but I think you could use different sources of income.
Maybe that's what it was, something like that. Yeah.
Or if you're putting 50% down and you have an 850 credit score, then something like that. But yeah, I don't know.
No, we can use assets as income, but no, it doesn't. Income has to be verified, whatever the source is, whether it's payroll or assets as income.
Oh, okay.
Yeah. So anyway, well, we'll see what happens with moratoriums being lifted, and I mean, hopefully. But like I say, I think our financial institutions are in pretty strong place. We're all starting to wear masks again, which is very upsetting. But what are you going to do? I know that Carl's restaurant is requiring them all to wear masks all the time now, and I was out yesterday, and everybody had masks on. So good for Chicagoans, I say.
Yeah, I guess it depends on where you are. Some people are happy about it, some people aren't. But you know what? Better safe than sorry.
Right. Well, and as Wes and I were talking over the weekend about the whole mask thing, I mean, I don't think the city's going. It said in the paper this morning, actually, the city's not going to mandate masks anymore, but obviously strongly encourage. I don't think government is going to mandate that we wear masks again, but the reason we wear masks is to protect each other. Not, I'm vaccinated. Wes, you're vaccinated. Terrence, you're vaccinated, right? But we can still be carriers even though we're vaccinated. So we need to wear masks to protect each other. So let's be safe out there. And wear our masks, right? Until this thing is over. So, which Who would have thought that it would have been dragged on this long? But what are you going to do?
Well, exactly.
So, on that happy note, everybody have a good week. If you have any questions, by all means, put them in the chat. We'd love to get back to you, and hope you find our little chats informative and entertaining. Maybe, I don't know. I don't know how entertaining we are, but
Well, you are.
I don't know how quite to take that.
Well, you always make me laugh.
Thanks. All right, Mr. Beanie Captor Man. Terrence, what you got going on this week? Anything you want to share?
You know what? In my world, interest rates are dropping, so it is time for people to refinance. That is my tidbit for the week.
Oh.
So
what are the
yeah,
rates? What kind of rates are you talking about?
well, it depends on the property, depends on the person, but I'm seeing stuff in the twos. I got a couple going right now. I got people in the twos.
Wow,
So you know what? It is. I mean, it's worth a conversation. So I would definitely, ask that those are just even thinking about it. Reach out. We can run the numbers, see if it works.
Awesome.
And
Wow,
for
that's
you guys,
great.
it'd be a great way to reconnect with old clients. Just reach out to them and say, hey, have you thought about refinancing? Talk to Terrence and see, if it makes sense.
Awesome.
Good idea.
Good tip. Good. Well, on
Yeah.
that positive note, everybody have a good week. Reach out to Terrence at Terrence Terrell at Molitor Financial for see if it makes sense to do a refi, and hopefully we'll see you all back here next week.
Bye.
Sounds good. Bye-bye, guys.